Hi, today we're going to welcome Georgie, and he actually is a great friend of Michael, obviously the CEO, and he's a member of Nalu Capital. And we would like to welcome to the stage today and take it away. And we'd love him to talk a little bit about obviously how he got into the industry, what he knows about the DeFi industry specifically. And we have some additional questions for you. Welcome.
All right, thank you very much. Okay, so how I got in, I actually got in really by accident, actually a very lucky accident. I was finishing university. I went to college in the States, but I got my master's in Sweden. And I kind of graduated in the financial crisis. And I was kind of like finishing university, going to lots of jobs, going to lots of interviews, and not really getting any. And you know, summer hit, and I'm still like just finished university, had a lot of student loan debt, and I really wanted to work. But you know, I could do like some internships and stuff like that. But I really felt like I need to work more on my skill. And I did a tech startup and when I was in college in the States, and went on to grow it when afterwards in New York for about a year and a half, which didn't really get anywhere, but it really exposed me to software development, because I tried to build a lot of the code myself. Then after I finished my master's degree in Sweden, and I figured out that I'm not starting to work yet, and I figured that probably my skill is not that interesting yet, I figured that it's probably a good time to work more on software development, mostly because I saw the shortage back then. This was 2010, 2011 when I did the startup in New York. And this was when some of these, you know, Facebook was kind of getting popular. And Uber, I think, was not even live yet. I think Airbnb was just getting started. Is when really some of the early like big tech companies were kind of being born. And I saw the shortage of people with software development skills. So I wasn't planning to be a developer myself, but I felt like it's something that I could probably you know, get a bit better at. So I went to a software development bootcamp in London, England, and it was cheaper to pay for that bootcamp. It was for 3 months. It was cheaper to pay in Bitcoin. And this was in October 2013. So I did the craziest thing. I just bought Bitcoin to pay them. And, you know, I just got super lucky, because by the time I made the payment, Bitcoin went up about 20%. And this is very early on. October 2013 is when Bitcoin was about $200. So I kept the difference, which was amazing, because I think a month later, Bitcoin went up to like $1,000. And it was the first time I really made that much money in my life. And more or less, it was like, wow, I just paid for my school. And what happens is, I guess in life, when you make money in something, you get really interested. When I looked into Bitcoin, I mean, this was like barely anyone was talking about it. And the first time I ever saw anyone accepting as a payment, I obviously got interested a bit more. And of course, later on, it crashed. So by December, it went up to like $1,200, and then it was on the way down for another 3 years until it recovered again. But what happened is that just put Bitcoin in my hands, got me interested, and got me a more I basically enthused my appetite to learn, because when you're invested into something, you could obviously just buy it and not care, but it ended up being like a kind of a not sizable amount of what I had, but I didn't have much. I mean, I was in a minus because I still had student loans, right? But it ended up being like one of the few investments I have, and I really cared about it because it was meaningful to me. So I really started paying attention to what happens in the crypto space. And now, just to give you an idea, paying attention into crypto in 2013 is really like the very beginning, because Bitcoin was born in 2009. There wasn't really, it wasn't even kind of much going on in the space in the early days, up until I would say probably 2014, 2015, when, Ethereum and some of the other projects started being announced and more people started thinking about the potential applications for decentralized applications and store value and payments and all that sort of stuff. So I sat on a bunch of Bitcoin, and then I worked for the startup accelerator through which I met Michael, and we invited the Ethereum team to do their one of their first meetups, and I'm sitting on this Bitcoin. I'm looking at these guys. They're pitching some crazy ideas. The only way to invest is to invest with Bitcoin. So I'm like, okay, well, I guess I have a little bit. Maybe I'll just invest in that ICO. And that ICO ended up being a complete home run, because Ethereum is still around today. And it's where most of DeFi is living on today. And that's actually kind of changing, because a lot of competitor chains are getting traction. But yeah, I basically, really by coincidence, I ended up getting in very early in a lot of these really interesting unicorn opportunities. I guess that's what everyone's, as an investor, that's what everyone's dream is, to score unicorns. And I, really still worked up until 2017, regular jobs. I worked in startup accelerators and just tech in general, and decided to quit in 2017 because I just had too much to manage. I again, when it comes to like investments, I want to take the responsibility to make good decisions there. So I quit everything I was doing in 2017 to focus fully on investing. And kind of here we are, I guess, still doing that. I guess now it's a bit more official because I started a fund as well, which I like, because I no longer feel like a cowboy in the space. I'm no longer just like pushing buttons and, just, what are you doing? I don't know. I'm just buying stuff here and there. A bit more responsibility now. And yeah, I'm very happy about that. It's very recent, actually. The fund we recently launched, it's based in Singapore. So yeah, that's how I got started, I guess.
That's great, Georgie. So, I think a lot of people are, sort of Bitcoin's in the headlines. That's sort of the word that's kind of making it into the general lexicon these days, and Ethereum a little bit, but a lot of people still, DeFi is kind of like a layer or two below that. Maybe you can just describe a little bit what DeFi is to the group.
Yeah, well, I mean, if people have ever played with basically fintech, yeah, I guess a lot of, if you ever participate in fintech, which would be like borrowing and lending on fintech platforms, like you lend your money for like a small business to take a loan, or for anyone else to take a loan, personal loan or whatever. There are quite a few of these platforms that launched, I would say, like in 2014, 15, like Funding Circle in the UK, and quite a few like where you could fund mortgages for other people and all that sort of stuff. I guess it's got a lot of resemblance there, if that's the easier way to understand it. But obviously, it would really just be like, I would say, fintech, but in a decentralized manner, where there's no like a central company actually providing these opportunities to borrow and lend. It really is just a smart contract. So if you look at, let's say, Compound or Aave, which is a borrow and lend protocol, that is really like a self-driving bank, you could call it, because it's really just, it's a smart contract, which has obviously UI where you could basically go and select, I want to deposit Bitcoin and I want to take a loan in US dollars. And sort of the contract has parameters that manages that for you. So whatever interest you'll be paying really is based on supply and demand. What the collateral is also based on what the smart contract is has coded in, which could be changed by vote as well. So the people that created Compound can actually kind of take just, you know, retire at this point. They wouldn't, because obviously you can grow it. They could create partnerships with banks and all sorts of stuff, but they could give up on it today and we can still all use it. It really is self-driving. And it lives on Ethereum. Those still live in Ethereum. They're going on other chains now as well. So I'm trying to simplify it a little bit, but that is basically one of the main use cases in decentralized finance. Now, obviously, it's way bigger than that, because you could basically rebuild the whole financial ecosystem infrastructure on DeFi. Really, you know, you could capture everything. You know, payments, futures, options. They could all. A lot of them are now being done on exchanges, which, you know, they control. They can see what you trade. You know, a lot, basically everything out there that could really be done in decentralized manner, which has not been done before and has a lot of benefits when it comes to money, because the fact that you don't have to trust another party really creates use cases that were never possible before. But really, like, some of the things that are already getting traction that were absolutely not possible before would be, for example, let's say algorithmic stablecoins, which are stablecoins that are growing over time in value. So let's say purely, there's quite a few of them. Some of them get very complex in terms of how they grow and what yield they get. But like, let's say if I deposit $10 in Compound, and I can actually pull out then that $10 and I could send it around, and it's going to grow over time because it's actually earning interest in Compound. So it actually $10 that is transferable but still grows over time. That is pretty great, because we could be actually multiply that to a bunch of other protocols that earn yield, and we could be sending around money that is not going up and down like Bitcoin. It's still US dollars, but it actually is growing while it sits on your wallet. And that is pretty crazy. And some with the yields right now, some of these grow at like 30-40% per year, which is pretty crazy. I send you, you know, I send you a little bit of money today and it's gone up, and you're like, you didn't even invest it anywhere. It's just, I send you money that's already claimable as investment. So that's a crazy concept. I think that's not really picking up that much traction yet, but I think it's really big eventually. Wait, some people are asking questions. I don't know whether I should look at them.
Yeah, if you want to take one of those, go ahead. I actually have a question for you just about what you were saying, though. So
I'll come back to them. I'll come back to them.
Okay, so the you're talking about income from crypto. I think a lot of the naysayers about Bitcoin over the years have said that, well, it's just, you know, it doesn't earn any income. There's no value to it. Doesn't have yield. And, you know, as you say, there's a lot of decentralized finance applications that allow for people to do that. But, and so do you think the Coinbase IPO that's happening, I guess today in the US, is, you know, they get a piece of the income from loans that, or from staking that they allow? So do you think that that's going to have an effect on sort of like Wall Street pushing out the narrative about income and growing that space? As you say, a lot of people are not involved in it yet.
I didn't get what you're saying. People were complaining that there's no income by holding crypto. Yeah.
So Coinbase, you know, if you're on Binance or Coinbase, you can stake your coins and you get an income from it. You can also stake and they take a fee. So as Coinbase is going public, you know, people will discover that Coinbase earns a huge portion of their income from this sharing of the fees. So it's one thought that I had is that you know, Coinbase going public is going to make these income opportunities much more visible to the public because Wall Street has an incentive to discuss them in public. What do you think?
Yeah, that's quite possible. I didn't actually think about that, but the reality is that the staking income definitely, I mean, that is definitely a thing that I don't know how many people are making use of. But yeah, you essentially, for the most part, if you're staking things like Tezos and Polkadot, and you're getting like 4% a year yield, plus you're getting something that would potentially, you're betting that will go up on that in value. But obviously that's not as enticing as the yield you get in going in hardcore decentralized finance yield farming, where you could get a lot more than that. But yeah, that is definitely the staking income from staking is still, I would say, a relatively new thing. Maybe the first time I remember getting yield from staking was probably with Tezos, and that was like in 2018. Besides that, when you were getting some sort of income from your coins, was possible if you actually just lend them to a trader who wants to do whatever they want to do with them, or you lend them to exchange because they want them for something. So I feel like there was always some sort of income to be made somewhere. But like maybe you're right. Maybe that will become more popular now, which could be, I guess, an interesting signal. But I didn't think much about that. I'm in my DeFi cloud.
Yeah, cool. That's amazing. So Kat had a good question. What was your motivation behind starting your own fund?
Well, there's a couple of things. One was I got, I felt like I was constantly doing the same thing, it's been since 2013. It's quite a few years that I feel like I haven't progressed in the space beyond just following things and buying and selling. I wanted to create something more official and more professional. That was one of the reasons. Another reason is because people ask me. I've traded quite a bit. I would share the things that I'm buying with people. I've been right, hopefully more often than being wrong. And then these people came back to me and said, if you ever have a fund, I'll give you money to manage it. So I just came back to them and I said, I'm thinking of doing one. And they were like, oh, here you go. Boom. I would say these were the two reasons, but it took a long time. I'm not just coming out of nowhere.
You had to build up
You
had to build up some credibility in the space and kind of get
your... So that took time, but it only obviously happened organic. I didn't really have the initial idea to do it. There's also there's advantages in having a fund, because if you want to get into venture deals, they're looking for a name. So like the very, very hot venture deals, startup investments that you want to make in the space are very competitive to get into. So obviously some Silicon Valley venture capital firms get in and all that. But like, random dudes here and there don't. And I just didn't want to be a random dude here and there anymore. Yeah. Plus, I think Singapore is a great base to set up. Everything is pretty straightforward when it comes to finance. Yeah.
But what do you think about the sort of decentralized ways to have a fund that are coming on now? Do you think they're ready to go, or they will be sustainable in the future? Or are you going to stick with the Singapore base?
Oh man, I nearly wanted to make one instead there in the decentralized alternatives. I follow them closely. I invested in both of them. Well, the two big ones are D-Hedge and Melon, which renamed to Enzyme. And I only was able to realize how valuable they are after actually starting a fund, because like to have a fund right now, especially in complex trading like you do with crypto and multiple exchanges, and potentially you trade on different exchange, different chains, and now with DeFi and staking and everything, it's really hard to audit everything, but you need to audit everything. and you need to basically keep track on what your P&L is. And that's really a bitch. And it's much easier on when you have a platform that actually you can trust in a decentralized way, and all transactions are already tracked if you just trade on it. And you know, that was not possible before as well. I mean, there wasn't, like, Melon was announced in 2017. I remember when they launched, I think it was February 2017. It took them until now to actually have a product. So it took a while. I think they didn't have, actually, you know, Ethereum was quite in an immature state to be built on back then, right? So there were so many ideas in 2017, but the chain was just not ready. I see so many traders on Twitter posting charts. This is gonna go, and they claim that they've made money, but there's no way you can prove that. And quite often I think a lot of them don't. They get Twitter following, they get lucky. In a bull market, it's very easy to get lucky and go up and say, Bitcoin is gonna go up, and then it actually goes up, and then you're like a great trader. But like, in a bull market, that's easier to accomplish. But like, if you're using dhedge or enzyme, the chain tracks all that, and that skips auditors, skips accountants, skips quite a few fees, skips a lot of work on your side that wasn't possible before. So yeah, that's what happened. A lot of these are just kind of like eliminating jobs. A lot of what stuff that happens on chain, on the blockchain, is really eliminating white collar jobs that were not really getting that much competition before. But I think they really are getting competition now. I could see it. If we start using it, we'll stop using our accountants
and lawyers and legal systems, and right.
Everything, because you don't, like, setting up the fund, opening the bank account took 8 months.
Oh, well, really?
We paid. So if you can do that through the blockchain, which is coming up as well, incorporation, and then Wyoming is doing all sorts of things. We'll be incorporating there. If you can do it with one click, and then you don't actually need a bank account because everything is in a wallet, well, we skip those guys too. We're just skipping all these people that we couldn't before. We really just couldn't. We had to go through them.
It's super simple and elegant. But now, so I want to get to there's a double question here, one from Yip and one from Mario. That's essentially the same question, at least according to Mario. I think he had the same question. How do you differentiate between sustainable growth and bubble growth in an industry? What is the difference between a healthy project and a scam project?
Okay, so seems like every new technology ends up growing in bubbles. That's just inevitable because human nature, I guess, is to fluctuate to where the opportunities, where whatever seems interesting, whatever seems hot. And obviously the fact that you can visibly see how it grows. This is all, we could be all excited about Uber and Airbnb before they were public, but there was no way for us to invest. With crypto, you get these early stage big potential projects, changing the world, whatever, the stuff that we're talking about earlier with replacing the accountants and all that. But you could also buy them. If this was a regular company, they were private investments. Only angel investors and Silicon Valley people and whatever would be buying those things, investing, and then you wait a couple of years and then it launches and all sort of stuff. In crypto, they're live. They might not even have a product. They could be super early, but they could be trading. And that creates bubbles because people get too excited about the opportunity. You know, the way me and you are describing it, you could really make it seem like it's the biggest deal. How big is the size of hedge funds? How big is that market? Wow, okay, well, these could get really, really big. Well, let's buy all the money we can get in there. And there you go. And then it just goes into like some crazy valuations. And then And then there's a phenomenon now that I don't know whether it existed before, but like trading and investing is just seems to be a lot more accessible.
Democratization? Is that the word?
Huh?
You're looking for democratization?
Well, there's mobile apps. There's, you know, there's all sorts of, I feel like before I might, you know, I was expecting that I need to call someone to buy something before, you know, get a financial advisor, whatnot. Now just download the app, buy stuff, super easy. You could get people that are not doing research buying anything. And then that also creates bubbles. Not saying that they're not smart, but they definitely, a lot of these people have not done research. They don't know what valuation they're buying stuff on. That creates bubbles too.
So, okay, so we're talking about cutting out all these previously needed, you know, jobs or functions in DeFi. Do you think that that can, I mean, because UNIT is, the project that we're on is kind of like, you know, cutting out whole, you know, tokenizing much more of the economy than just the financial industry. That's kind of one of the main ideas. So do you think that we're on the cusp of these applications going beyond pure finance, or is it kind of going to be localized, do you think?
Well, starting out with finance was definitely what was the most, what made the most sense, most to me, mostly because I felt like everything got disrupted, but finance. You know, newspapers got disrupted. You know, even the travel business, travel agencies, a lot of industries got totally disrupted by technology. When it comes to finance, maybe some of these smaller banks like Revolut and whatnot, maybe some of the peer-to-peer lending that I mentioned earlier, but not in a major way. And at the end of the day, Revolut just offers a slightly better product than a bank would offer you, but at the end of the day, it's still a debit card with an app, you know? So I think you need like an incremental increase in quality for something to get really, really disrupted. And seems to me that you could get that with crypto when it comes to finance. And that's definitely a big deal because that is humongous space. I didn't expect to see the rest getting disrupted as fast as it's actually happening. Like what's happening with NFTs now, I didn't see that coming.
What's your take on those?
Well, it's I don't follow it as closely. I think following NFTs is a completely different category. In the early days, what's great about it is that people, it's basically an NFT, non-fungible token, is really just a great application for blockchain. So it really shows that blockchains actually are not vaporware. They could be useful for something. You could actually, there was no way before to prove ownership of something digitally. There really wasn't. Like that's the, you know, you can prove the ownership of something digitally with money. That's why we initially were all super excited about it. That's a super big deal and it's super hard to comprehend. But you know, something that in natural way, if I give you an apple, I no longer have the apple. Very easy to comprehend. But in the digital world, if I give you a digital apple or a song, it's much easier, much harder to actually sort of prove that I no longer have it because it could be just a copy. So that's actually, yeah, it's a pretty big deal. Actually, really, really big deal because that could actually maybe change things up when it comes to music as well. It's not just, you know, we're listening to, you know, people talking about NFTs and artwork and digital pictures being sent around, which sounds really, really silly. But the idea is that, you know, if you hear a lot of if you hear a lot of artists, you know, their days, their big days for a lot of musicians was when they could sell their music, and they can't do that now because everything is streamed, and everything is on Spotify and YouTube, whatever, and they only really make money on sponsorships and concerts and whatnot. But maybe that comes back, because maybe now they could actually do it like in an NFT format, and the only way that you can listen to it is if you actually have it, almost the same as if you had the CD. And then it goes, I mean, and then it goes way beyond that with a bunch of other things that you couldn't prove digitally before. And then you could put, you know, real estate or other things that are actually physical already. You could just put them on the blockchain and track them that way. So if we transfer the NFT, we really just transfer our house. And then there you go, that skips. I borrowed the money from Aave to buy your house, which was an NFT. You transferred it to my wallet. We just skipped everything that we have to do in the normal world. And now I own your house. That was it. We're not there yet, but like it was like literally building infrastructure for that to happen, which is crazy.
It doesn't seem that far away though. But do you think that that will be connected like to the real world, or is it just like an accounting that we can look at the ledger and say, this is my house or your house? Like, will it be connected like through some automatic way of transfer, you know?
I don't know. It's a bit too early to tell. I mean, I think it would be complicated, and it would definitely take time to that particular thing to transfer a house, where what requires having to be basically implemented by all the regulators and all sorts of stuff. So I think that's probably a little bit, I have no idea about that, but that's why we're starting. That's why this is starting with digital photos. And with that, I don't need your permission or anyone's permission for you to sell me or whatever digital flower. But
right. As
but
you say,
yeah,
it seems kind of silly.
Faster. Yeah, but it's happening faster than I thought. So maybe, yeah, I honestly did not foresee that. I did not foresee that happening. I was very sure about DeFi, and I was betting on DeFi for a long time. But I did not foresee the NFT space and the other Web3 things that are picking up. And I did not even foresee things like companies like Tesla buying Bitcoin. I didn't expect that. That's also a big deal.
Yeah. Amazing. So let's see. So Yip asked a question, can you share a bit more about your strategy for the fund? What projects are you investing into, and how did you derive the thesis?
Yeah, well, we basically are mostly investing in DeFi and Web3, and also competing blockchains. Ethereum is the main blockchain that a lot of the DeFi and Web3 applications are built on right now, but it really seemed like Ethereum is the winner last year. This is how quick things change, right? Last year, I was nearly certain that all the other blockchains are going to have a hard time. And then what happened with Binance, I think, took me and a lot of people by surprise. But Ethereum started getting extremely popular, started getting extremely expensive to transact on Ethereum, to a point where new users really just could not use it. It would cost you $50 to make a transfer, which is crazy, right? So you cannot use it for daily use, or build an application. You cannot build a decentralized Uber on something that costs you $30 to transact.
And somebody, go ahead.
And with Binance Chain, basically the reason why people believe that is because Ethereum just had so much built on it. It had all these protocols that I mentioned, borrow and lend protocols that I mentioned, a lot of swap protocols, decentralized exchanges like Uniswap, basically a lot of almost everything that we know in DeFi built in Ethereum. So it's just very hard to like start out with a new chain, because the new chain just doesn't have this infrastructure where you can swap, where we can borrow, stable coins, all that sorts of stuff. But then Binance Chain created Binance created a chain that is very cheap to use, and also 30% of the fees that are being spent on the chain go back to the smart contract developers, which is a huge incentive for anyone to build on the Binance chain. Then they basically forked, really just copied a lot of what happens in Ethereum, and they started giving away tokens to use it, and it like grew like crazy. So it basically showed that you can actually create a computing chain faster and easier. Well, it's easier for Binance because they're a big chain, but faster and easier than people thought. So we're also investing in layer ones as well, because we think that trend might continue. Mostly
because, I'm sorry, go ahead.
Mostly because of the fees. I think fees will not be lower on Ethereum probably until it could take a whole year. I think probably the fees will be still high.
Wow. Okay. Really, a year? Yeah, okay. So that was somebody's question about the gas fees. What do you think about Polkadot? Units being built on Polkadot, but also it can make these other chains interact with each other. Do you think that will tend to solve some of the problems, make it more scalable?
Yeah, I mean, there's a lot of excitement about Polkadot. It probably, I would say, the hardest chain after Ethereum. I guess Binance and Polkadot really are, that I would say, currently the two biggest competitors, and I'll probably add Solana in there as well, and Cosmos as well is picking up now. Yeah, design is actually more scalable. Being able to have your own chain but use the security of Polkadot. Honestly, I'm not very deep onto Polkadot, mostly because I like to betting on things that I can use right now, and a lot of the Polkadot ecosystem is still being built, and it's still quite early. And a lot of the stuff that I'm personally interested in DeFi still just mostly works on Ethereum. So I'm not very well educated on Polkadot, but I have a decent sized bet in there, because I just speak to developers who built on Polkadot, and they're basically saying that it is way better design. And it's just, it's a much better place for a network to live, basically. I don't know. I don't know much more about that, to be honest. I don't have much of an opinion.
Yeah, fair enough. So it's just as in the overall vision, like, are you kind of like, I mean, you kind of accidentally got into Bitcoin at the beginning. Do you sort of see it? I mean, are you kind of a believer? Like, what's your vision for the future of like how it can change the world, or any anything like that?
I mean, I'm not crazy like that. That I think that the whole world is going to run on crypto, and Bitcoin is going to be 100 billion and all that sorts of stuff. I'm just purely just black and white. I'm just seeing things that blockchain technology creates possibilities to disrupt existing businesses, financial industry number one, but a lot of other industries as well. In a lot of technology businesses could actually be disrupted. We could have decentralized versions, like social networks are probably another great example, where they probably could be better versions of them, where you own your own data. And that's the whole business of Facebook. It's just your data, and you don't benefit from it, besides the fact that they give you a nice tool that you can message people and follow people. That could really cause, like, I don't know if you would get there, but the fact that you could be in control of all this could potentially make you wealthier. Because you basically, it's kind of sad what's happening right now, but there's a lot of money being printed, and a lot of money goes into the financial markets, and basically the people that get wealthier are the ones that are building companies that are the entrepreneurs or the investors, really. But there are average people that don't have bets in there. They don't really have any ways to benefit, right? So maybe that will distribute the wealth a little bit, because the wealth needs to be distributed. Otherwise, we're hitting like a point where there's just too much of a divide between super wealthy and not so wealthy. Really, like the divide that's being created right now is wealthy that already had money now having more money, but the new money is actually in people that betting on tech. There's a lot of people that had nothing, including me, and maybe have a little bit more now because of technology. So, and that's even not accessible to a lot of people in the world, because a lot of people don't even have access to technology. So, yeah. But I'm not like, I'm not like a revolutionary guy like that. I really am just like, okay, well, just the example I gave, this could be better around blockchain. Boom, simple.
Yeah, just cut out some costs and
cut out a few middlemen. There you go.
So amazing. So Yip had a question. What are the other Web3 things that are picking up? And can you share examples for Web3? And what does this encompass, and how does it is it different from Web2?
Web3 is really just like decentralized web. So the decentralized Facebook, whatever they want to call it, would be Web3 social network. Decentralized Uber will be a Web3 Uber app. And the difference there would be that first, the data that that company has, or that network has, is actually controlled by you. So I guess if I currently have an account on Facebook, they know everything about me. But in the centralized way, we could make it so that I actually have data, and if someone has to use it, if someone wants to use it, they need to ask for your permission, or they need to pay you for that. In a decentralized Uber, I guess, right now there's about, I don't know, it seems like Uber drivers are complaining about the fact that they don't make a lot of money, because Uber drivers really are just employees of Uber, as far as I understand it. A decentralized Uber, I guess, could get a little bit closer to being your own driver, but participating in that network that finds you the people that want to get a taxi. But you really get most of the money from riding someone, right? So it's not a crazy efficiency, but that's why I think the biggest efficiency, in my opinion, is in finance. But it's it's a decent. It could get bigger than that too. These are the examples that I can think of right now, and none of this is live yet. By the way, we don't have live decentralized Uber or a decentralized social network that's big.
I wonder if somebody's going to call it Duber. It'd be funny.
Other Web3 stuff. One interesting one actually is the domain names. So there's an attempt to decentralize that, because currently .com, for example, is really just owned by a company called Icon, and we have to pay them each time we register a domain name. And I think they became an owner of that. I actually don't know. I might be saying stuff because I didn't inform here, but I think they became owners of that for whatever reason, right? And to register a new .jo domain name, I think, I don't know, I don't even know what the process of that is, but I think you could do that in a decentralized way. So a lot of these names could be actually built in a decentralized way and completely skip the bouncer, because Icon really is a bouncer. Give me money so you can use this. So a lot of Web3 basically is just skipping on some of the existing stuff now and completely just kind of like building a new infrastructure. Screw Facebook, we'll build a better one. We can do better domain names, and then you could be in control of the data. That's kind of like, in short, I would say what Web3 is.
Cool. So I guess we have time for one more. I don't know how long it'll take you to answer this question, but it's, but how long do you think the bull market in crypto is going to continue?
Okay, well, so there's technological improvements, 100%. I didn't see, as I mentioned before, I didn't see NFTs coming up a few months ago. 2 months later, they're here and they're getting really big, and people are really taking them, like people are really building applications there, and it's getting a lot of views. What's crazy about this market is that probably a few months from now, there'll be something that's being built that is super exciting that we didn't think about, or we didn't think that it would be there yet, or we didn't even think it was possible. So in a market like when things like that happen, it's very hard to predict. On top of all that, we're seeing a massive growth in new users. Honestly, if you know how to farm, you could make a lot of money in crypto right now without taking too much risk. It takes quite a while to be educated about it, but if you get educated about it, honestly, it's a really good income. There's other crazy things too, like decentralized games, where if you do well, you actually earn money. So I know, like, there's a game called Axie Infinity. On average, apparently people can make $3 to $4 a day from playing it. And in certain countries, that's a very good income. And that's been getting exponential growth. And I don't know, like, you see all these things really like growing. Is the market overheated? Yeah. Altcoins are really only valued this much because Bitcoin is $1 trillion. And if Bitcoin doubles from here, which would be a lot, but it's not like crazy, that adds 1 trillion extra buying power for altcoins. That's a lot. So I definitely think it's overvalued though. Right. I'm having a hard time sometimes buying stuff, but sometimes
So cheap before.
You have to be like a mix of rational and irrational, but also really just look at what's happening in the world. And I think there could be still some growth. Yeah.
Great. Okay, so and then we'll end on this note, and then we'll move to some networking. What was your happiest moment in the past year? Sounds like you had a lot of happy moments.
Oh my God. Honestly, I mean, just like, it's been mostly, I guess, a stale year. I haven't moved that much. Generally, we travel a lot, but not this time. Probably like starting this fund was the day we started. It felt like a big accomplishment. So I felt quite happy on that day. Because I really felt like before I was making money, but not building anything. And now I actually built something. And hiring people, creating jobs. We just hired a guy in Hong Kong. So yeah, that definitely made me happy. But besides that, small daily things like surfing or stuff like that. Eating.
Being in Bali, just doing stuff.
Being in Bali, eating good food.
Yeah. Great. So awesome. Thanks a lot, Georgie, for being with us here. And I think just stick around because maybe Petra, or I'm not sure.
Yeah, totally. Like normally our dynamic is the following, that we're like breaking out in like little breakout rooms, and participants can like just talk about like what just like what they just heard, like about like the topic, etc. If you want, you can participate, and you're just gonna be randomly put into a group. Otherwise, I'm gonna thank you, and yeah. Hope to see you.
Cool.
Cool.
All right. Well, yeah, thanks guys. This was really cool. Really fun. I love the questions, and I hope people made something out of it. Yeah, thanks again for the invite.
Thank you so much.
Thanks, Georgie. See you down in Canggu.
See you later.